What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 15 free stocks, Mumu is going to give you up to 15 free stocks when you open a new Mumu brokerage account. When you put $100 in your new brokerage account, they're going to give you 5 free stocks. If you decide to put $1,000 in your new Mumu brokerage account, they're going to give you 15 free stocks. Big boy, publicly traded companies. Get down to the description box and click on that Mumu link. Open up your new Mumu account today. Go get that free stock. Go get that free money. What an amazing comeback rally that has started after the Fed made a historic cut in short-term interest rates. That's right, folks. We are on our way to a comeback rally. Well, at least that's my opinion. Now, I don't have a crystal ball. I'm no expert here. I'm just sharing with you my feelings on the subject of the stock market comeback, the bounce back, whatever you want to call it. I call it wealth building. I'm not sure what you call it, but that's what I call it. Let's dive in. Here's the headline. Dow Jones 500 jumps. S&P 500 closes above 5,700 for the first time a day after Fed slashes rates. So you got the S&P and the Dow jumped. Here we go. Stocks jumped Thursday with the Dow Jones Industrial Average and S&P 500 rising to new all-time highs as traders cheered the Federal Reserve's Wednesday decision to lower interest rates by 0.5 percentage point. Now hold up, pump the brakes. Yesterday, if I can recall, traders were not cheering the Federal Reserve. They were basically trying to throw the Federal Reserve under the bus and said, you decrease interest rates by 50 basis points. That must mean the economy is in trouble. The labor market is in trouble. Let's sell off, because that's exactly what they did before the market closed yesterday. They sold off. But now today, they're cheering them. They're cheering them today. The 30 stock advanced 522.09 points, or 1.26%, topping 42,000 points for the first time ever in its history, guys. My goodness. The S&P 500 rose 1.7%, marking its first break above 5,700 points in its history. The NASDAQ surged 2.51%. Listen, guys, I told you yesterday, when rates go down, assets go up, and that includes paper assets. This is just the beginning, though. This is just the beginning. Traders got some validation that the Fed was engineering a soft landing for the economy on Thursday as weekly jobless claims fell by 12,000 to 219,000, which was far below estimates. So they got some good news today. I guess that's the reason why they started cheering them instead of throwing them under the bus like they did yesterday. They got good news. Jobless claims fell by 12,000. That's good news, because what does that tell us? That the labor market is not in trouble. right? See, if the labor market is in trouble, you would expect jobless claims or unemployment benefit claims to go up if the labor market was in trouble. Since it's going down, it's not in trouble. So now they're cheering the Federal Reserve for lowering rates by 50 basis points. That's why you saw the bounce. That's why you see this stock market rally or comeback rally. Traders got some validation that the Fed was engineering a soft landing. They like that. Tech stocks rallied as the rate cut spurred investors to return to rotate back in stocks. Tech stocks. See, now they're rotating back into tech stocks. NVIDIA and AMD shares popped about 4% and nearly 6% respectively. Micron Technology added 2.2%, and other big tech stocks such as Meta Platforms and Alphabet advanced 3.9 and 1.5 respectively. Now, why are investors rotating back into tech stocks? Because typically tech stocks are considered growth stocks. And history tells us when interest rates go down, growth stocks go up. So is it a surprise that investors are starting to rotate back in now? No, it's not a surprise. They know what's going on. They know tech stocks, AKA growth stocks, go higher when rates go lower. They're not idiots. They're in this thing to make money, guys. That's what we should be in it to do. Stocks leveraged to lower rates, spurring the economy, also jumped Thursday. Financial giant JP Morgan Chase rose 1.4%. Industrial stock, Caterpillar and Home Depot gained 5.1 and 1.7 respectively. See, I told you guys about a month ago when Home Depot and Lowe's started falling a little bit. Their stock price started falling a little bit. Why? Because people were afraid that the economy was slowing down. And you got to understand, companies like Home Depot and the like, they do well when the economy does well. They do well when interest rates come down. Now, people will go out and borrow on their homes to do home improvements, right? Contractors will start picking up more supplies, and this is great for Home Depot. No wonder their stock price is up about 1.7%. The Fed slashed its overnight lending rate to a range of 4.75 to 5%, from 5.25 to 5.5 on Wednesday. Now, it's widely anticipated the Fed is not done. They got 50 more basis points this year to come down on the rate, and then a full 100 basis points in 2025. Altogether, guys, over the next 12 months, we can have 200 basis points lowered on the Fed funds rate, bringing us to around 3.5, which is going to be the neutral rate. That's a good thing for stocks, in my opinion. Again, I'm no expert here. I'm just going off of what history has said. History says when interest rates come down, that's a stimulus package for the economy. And if the economy gets a stimulus package in the form of reduced rates, where companies now can go borrow money at a discount, at a deeper discount than 2 months ago or a year ago, they go take that money and then they put it into growth, AKA growth stocks. Consumers can take that money and go buy stuff and give the economy a little bit of a boost, the GDP a little of a boost. Or they can take that borrowed money, because they can borrow it cheaper today than they did yesterday, and they can put it in assets. That's why assets jump when rates come down, because it's a stimulus to the economy and it's a stimulus to our financial markets. All my opinion, guys, you guys got to go out on and do your own research. And when I say research, I'm talking about Google. You got to go do your own research. I'm just telling you what my opinion is. And I think we go higher. Now, still going to be volatile for the rest of September. October, and part of November. But once we get on the other side of the election, for the remainder of the year, we're going to bounce. And we're going to bounce real high, in my opinion. So my goal is to keep picking up the big boy blue chip all through September, all through October, all through November, on into December. Just keep picking them up at a discount. So by the time the mid to late December gets here, they're ready to take a major bounce going into 2025, because now everybody is starting from zero again. And all these big boy institutional investors are going to be coming back in the market because they're back to zero. It's what have you done for me lately? Their clients don't care about 24 when we're in 25. They want to know what you're going to do for me in 25. So they're going to have to get back into these stocks. They're going to have to get back into these big boy blue chips in order to make some money. And I'm going to be right there waiting on them when they do. Because again, I believe we go higher. Drop me some comments down in the comment box and let me know what you think about what's going on right now with the Fed and the rate reduction schedule, and how you believe it will affect big boy blue chip, aka growth stocks. Love to hear your feedback. Drop it down in the comment box. If you want up to 15 free stocks, Mumu is going to give you up to 15 free stocks when you open a new Mumu brokerage account. You put $100 in there, they're going to give you 5 free stocks. You put $1,000 in your new brokerage account, they're going to give you 15 free stocks. There's a link down in the description box. Click on that Mumu link. Open up that new Mumu account today. Go get that free stock. Go get that free money. And guys, check out my new website, www.richardfain.net. Go check out those fantastic 10 digital products that I've handpicked to help you collapse timeframes and get to your pot of gold at the end of the rainbow. While you're there, consider joining the Wealth Builders. We're the fastest growing financial community on Patreon. All you got to do is, when you're in the website, look for the membership button, look for the join button, and click on it. And then come on over to Patreon and join us. We got over 1,000 Wealth Builders in less than 5 months. Fastest growing financial community on Patreon. We'd love to have you a part of our fantastic financial community. So come join us. Well, guys, thank you for stopping by the channel. And if you're stopping by for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace.